a Japanese newspaper writer writing under the pen name Ichimoku Sanjin. Now, he developed this charting technique before World War II, and he offered it to the public when he published his book in 1969. So it's been around for other traders to use since around 1969. Now, Ichimoku Kinko Hyo is the name of the indicator. If we break that up, Ichimoku from Japanese translates into at a glance or one look, and Kinko Hyo translates as the table of equilibrium or the balance table. And I mean, that name also reflecting the point or the aim of the indicator, which is what? To be able to look at any chart with this indicator and in one glance, in one look, get a good idea of what's going on. Or in other words, to quickly summarize that information of where's the trend, where's momentum, and if we were interested in doing something in this market, what would it be? So that's the idea of the Ichimoku, by one glance to clear up what is going on in the marketplace. This now, of course, can be used as an analytical tool. Many people also use it as its own complete strategy. So Ichimoku, very well-known and widely used indicator. So hence a chart displaying this indicator provides a broad look at the price in one single view. So you should be able to look at the chart and know whether you'd be interested to buy or sell, and maybe when that next entry point is. Now, Ichimoku Kinko Hyo is made up of 5 different lines, 5 different plots, and these 5 different plots are based on 3 key time periods. All right, 3 key time periods. Now, the time periods used by default on the indicator are the original periods that were used at the time when it was developed. Now, back then, Japan in the 1930s, a trading week was 6 working days. Yes, Saturday also used to be a working day. So the periods that are used by default are the ones reflecting the 1930s Japan calendar. As we said, 6 working days to the week. Now, some traders, of course, may use those default, which I think is the usual that is being used, or someone can alter them to reflect maybe the current trading schedule. But the 3 key time periods used for these 5 individual plots are the 9 periods, which used to represent 1.5 weeks of trading activity. The 26 periods, which used to represent roughly 1 month of trading activity, 26 working days to the month. Now that would be reflected in 22 periods. And the third key period is the 52 periods, 2 months of trading activity. Now, let's go and look at the 5 different individual plots and how they're calculated. But before we go into that, what I'm going to do is I'm just going to add the Ichimoku indicator on my platform so we can get a look at what it looks like. So just going to drag that Ichimoku. Where do I find it? In the navigator on the bottom left. Under indicators, it's the first bracket, trend, and it's there, number 4 in the series, Ichimoku Kinko Hyo. So I drag and drop it into the chart, and as you can see, those default time periods being used are the 9, 26, 52. Now, of course, you may wish to alter those colors. What I'm simply going to do is I'm just going to make my lines a little bit thicker so you can see them a bit more clearly. So that is what the Ichimoku looks like. Yes, looks a bit chaotic, doesn't it? At first glance, might give you a bit of a headache. But after we simplify it, it is not as complicated as it may seem. What essentially is going on here is that these are the different 5 lines that make up the Ichimoku. Yes, the 2 lines that make up this shaded area here, the 2 different lines that make that up, this nice blue line here, this nice red line here, and this nice green line here. Those are the 5 different lines, yes? Now, what's important to understand that all these lines, essentially, what are there is we're going to see how they're constructed. They're moving averages, essentially, in a slightly different way than we find our normal moving averages. But essentially what they are various types of moving averages. All right, so we have those 5 different lines. Now what we're going to do is we'll remove them all and go explain one by one. So as we're explaining one by one, instead of having them all there, we'll delete them and we'll focus one by one on each of the ones that we're explaining. So let's start off first with the Tenkan-sen. So this is our first line that we're going to be introducing. It is also known as the turning line. Now, the default periods for this plot is the 9 periods. How is it calculated? Based on the last 9 periods in the market. Yes, it finds the highest high and it adds it to the lowest low and it divides by 2. So it finds a form of average based on the range of the last 9 periods. Yes, so it finds the highest high, the lowest low, adds them together, divided by 2. And in a very simple way, that is what the Tenkan-sen is. So if we go back, and now if we introduce this line being the red line, you see if I take my mouse on top of it, it annotates it as Tenkan-sen. So there is our first line. Now we're going to see later about the interpretations, but this is our faster moving momentum line. That's our Tenkan-sen. So essentially a moving average, a median moving average based on, not a median actually, but based on the last 9 periods. Then we have the Kijun-sen, which is our second momentum line, also known as the standard line. Now the default periods for this plot is the 26 periods. So based on the last 26 periods now, again, finds the highest high plus the lowest low and divide by 2. So it finds the range of the last 26 periods, highest value, the lowest value, and adds them and divides by 2 based on the last 26. So calculation, exactly the same as the Tenkan-sen, only the Tenkan-sen is using the 9 periods, the Kijun-sen is using the 26. So in other words, it's like 2 moving averages, one being the faster one, one being the slower one. Yes, their interpretations won't be much different from moving averages either. Now let's go and add that Kijun-sen line. So I'm going to go into my indicator here. There's the Kijun-sen, and I'm going to make it a nice blue color. Press OK. And that blue line is our Kijun-sen. Yes, so we have our faster moving momentum line and our slower moving momentum line. All right. Now, next 2 lines that we're going to see are the Sekuspan A and the Sekuspan B, which when put together, they create that shaded area that we saw earlier. So if we see them one by one, first the Sekuspan A being the first span. Now, as we said, this, along with the Sekuspan B, are going to create the cloud or the Kumo, which is that shaded area we're going to see in a while. Now, the calculation for the Sekuspan A uses the 52 periods. And calculation is, based on the last 52 periods, Tenkan-sen plus Kijun-sen divided by 2. So it's another form of average based on the Tenkan-sen and the Kijun-sen. Now, the Sekuspan A with the Sekuspan B are referred to as leading because after they are plotted, after they are estimated, they are plotted 26 periods into the future. So they're plotted 26 periods forward from the last candle that we see on the price. Let's go and add that Sekuspan A. So we go into indicator list, we find our Ichimoku. Here is the Sekuspan A would be the one that is aligned as outlined as up Kumo. So let's give it, can't remember what color I usually have it at. Let's give it a little bit of an open color. What can that be? What about this color? There we go. So as we see, that line is the Sekuspan A. Let's ignore the shading for now. So that line is the Seku span A. Now let's go and add the Seku span B. The Seku span B, which is the second span, default periods for this calculation is the 52. And what is it doing? Highest high plus the lowest low based on the last 52, adds them together and divides by 2. So similar to how the Tenkan-sen, Kijun-sen did it, but this one's more long-term based on the 52 periods. Again, once this is estimated, it is plotted 26 periods into the future. So let's go back and add that Seku span B. Seku span B will be the one that is annotated down Kumo. So let's give that a little orangey color. So there we go. That orange line is the Seku span B. Yes, now we'll explain it, of course, later on. But when Seku span A is above Seku span B, this gives a bullish shaded Kumo. The Kumo, or the cloud, is the area between these two lines. Yes. Now, when the Seku span A is above the Seku span B, the Kumo is colored in a bullish color. When the Seku span A is below the Seku span B, then the Kumo is shaded in a bearish color, or takes the color of the down Kumo color. Yes. Now, as you see, again, these two lines are plotted 26 periods into the future. Yes, so we have here our last candle, and if I measure forwards, we can see the Kumo is ending 26 periods into the future. So Seku span A, Seku span B, plotted 26 periods into the future. And that leaves one more line for us to meet, which is the Chiku span. So what's the Chiku span? It's seen as the delayed line. Now, the plot for this line is simply the closing price plotted as a line graph, plotted 26 periods ago. Let me go through that again, because this can get a bit confusing sometimes with the Chiku span. It is simply a plot of the closing price plotted 26 periods ago. So in order to understand that, what I'm going to do now is I'm going to go remove all the other lines and just put the Chiku span on so we can see that and understand that. So if we put the Chiku span as a green line here, there we see the Chiku span. Now look at this just so we can see exactly what it is. I'm going to change my candlestick chart to a line chart. Now remember what a line chart is. It's simply a straight line connecting the closing price of each period. Now, if you notice very clearly now, you will see that the green line is an exact copy of the line chart. Yes, an exact copy of the line chart, only plotted 26 periods behind. Yes, so exactly where my price line chart ends now, so does the Chiku span, just plotted 26 periods behind. Yes? So it's an exact copy of the price chart plotted 26 periods behind. Everyone clear what the Chiku span is? All right, I'll take that as a yes. So that's what the Chiku span is. Simply the price plotted 26 periods behind. Now, of course, we're going to change back to a candlestick chart. That was just to see and understand what that Chiku span is. So what I'm going to do now is I'm going to add all those together again. Let me also add the Chiku span here. And with all 5 different plots, that is what our Ichimoku looks like. Yes, so we have Chiku span being the green line, plotted 26 periods behind. Seku span A, Seku span B making the Kumo, plotted 26 periods into the future. And then we have our Tenkan-sen and our Kijun-sen. All right, so let's go to the interpretation of the Ichimoku Kinko Hyo and all these signals. But before we continue to the signals, and we're going to see that Each one of these lines has a signal to offer us, yes? But what's important to understand before we go into the interpretation about the Ichimoku is that the Ichimoku is not seen as giving off 5 different signals. The signal that comes from Ichimoku is one signal determined by the aggregate results of those 5 signals. Yes? In other words, the Ichimoku 5 different plots are interpreted as one indicator, meaning that if all the plots agree towards the same direction, then we have a strong signal. If the indications don't agree between them and they're conflicting, let's say 3 are pointing upwards, 2 are pointing downwards, then we have an unreliable chart or not a very strong signal. Yes? So even though we're going to interpret each of those lines differently, the main signal that comes out of the Ichimoku is as one signal. Yes? All of those come together to provide one signal from the Ichimoku. But let's go and learn each one by one and then see how we put them together. So first, focusing on the Tenkan-sen and the Kijun-sen. Yes? Now remember Tenkan-sen, Kijun-sen being our red and blue lines. Yes? All right. Well, not very different to moving averages. So a buy signal is generated when the Tenkan-sen crosses above the Kijun-sen. And a sell signal is generated when the Tenkan-sen crosses below the Kijun-sen. Let's see first of all that. So what could we say? When the red line goes below the blue line there, we have a sell signal. Yes? And if we let's find another case, for example, here, when the red line goes above the blue line, we have a buy signal. And this is the signal of the crossover, the relationship between the red and blue line. If we switch to another chart, for example, let's zoom in here. So when we have the red line crossing below the blue line, we have a sell signal. Yes, and when we have the red line crossing above the blue line, we have a buy signal. Now, the signals that focus on Tenkan-sen and Kijun-sen are more to do with momentum. So these lines are going to help us identify possible turning points. Now, as far as the buy and the sell signal goes, as we said, red crosses above blue, shorter term average crosses above longer, buy signal, shorter term crosses below longer, sell signal. All right, so that's the first interpretations from those lines. Now, apart from that, Tenkan-sen and Kijun-sen can also be used as support and resistance levels in an ongoing trend. So many times, corrections from that trend can come, find resistance either on that red line Tenkan-sen or on that blue line Kijun-sen and continue moving downwards. So in strong trends, these levels are used as resistance levels. Yes, and support levels, of course, in uptrends. Right? So by that understanding also, another buy signal, let's focus first on the buy signals. So another buy signal is when the price crosses above the Tenkan-sen. And another buy signal is when the price crosses above Kijun-sen. Yes? So from that red and blue line so far, we found 3 different signals. Yes? One is comparing, of course, price with the red line. So price crosses above Tenkan-sen, it's a buy signal. Price crosses above blue line, Kijun-sen, it's a buy signal. Red line crosses above blue line, it's a buy signal again. Yes? Very similar to what we've seen about in moving averages. All right? So also here, when price crosses below Tenkan-sen is seen as a sell signal. Now, of course, out of those 3 signals, perhaps the more significant one or the stronger one would be the signal of the double crossover. So when the red and the blue line cross over. Yes? All right, so there are our first three indications as far as the Ichimoku. Now, important to understand that momentum signals focus on the Tenkan-sen and the Kijun-sen. Trend signals focus on the Seku span A and the Seku span B. So let's see how the signals come from the Seku span A and Seku span A. As we said, the area between the two spans is known as the Kumo or the cloud. Now, there are two ways to identify the trend using the cloud. First, trend is considered bullish when prices are above the cloud. Simple as that. So, where's a nice uptrend? Price is considered bullish as long as the price is above the Kumo. So ever since there where we broke above the Kumo until there where we went back into the Kumo, the trend is considered bullish. All right, trend is considered bearish when prices are below the Kumo. So if we go back to our downtrend previously on sterling, as long as the prices ever since there are below the Kumo, we are in a downtrend according to the Ichimoku. And price is considered neutral when prices are inside the cloud. All right, so prices are considered neutral when you're inside the cloud. So when is a situation that we might be inside the cloud? Well, either because the trend is actually neutral, yes, or maybe because the price is in a range and it's inside the Kumo, or when the trend is changing, of course, yes, from uptrend to downtrend. When that change happens, it's going to cross the Kumo. Also, when the market goes from downtrend to uptrend, it's going to cross past the Kumo. So as long as the price is within the Kumo, trend is considered bearish. Price below the Kumo, trend inside the Kumo, trend is considered neutral. Yes, either because it really is neutral or because it's a range or the trend is trying to turn around. Either of those cases, trend is considered neutral. And as long as price is below the Kumo, trend is considered bearish. As long as price is above the Kumo, trend is considered bullish. Now, that's the first way to determine the trend with the Kumo. The second way is based on the color of the Kumo, as we saw, yes? So the uptrend is strengthened when leading span A goes above leading span B, and this produces a green or bullish Kumo. So the uptrend is strengthened when the Kumo also turns a bullish color, in my case, the blue color. Yes? And the downtrend is strengthened when leading span A goes below leading span B, producing a red Kumo or a bearish Kumo. So the downtrend is reinforced or strengthened when we have a bearish, or in my case, orange looking Kumo. All right? So we'll put them all together as well. But so the color of the Kumo is acting as a confirmation to that ongoing trend. Yes, now remember, of course, that the Kumo is also drawn 26 periods into the future. Yes, so for example, here on this USD yen chart that we're looking at here, what's the color of the Kumo? It's a bearish color that we see. Yes, so for example, based on those interpretations we just saw now about the Kumo, what can we say on this USD yen 4-hour chart? Market is in a downtrend according to the Ichimoku, since prices are below the cloud, and our downtrend has been strengthened because we also have a bearish looking Kumo. Yes, those are the interpretations we're meant to take from the cloud in that kind of case. All right, and those are the signals from the cloud. Now, again, because the cloud has shifted 26 periods forward, it also provides a glimpse of future support and resistances. Now, what did we say? That red and blue lines can also act as support and resistance levels. Yes. Now, another area of support and resistance is also the Kumo. So the whole of the Kumo area is seen as an important support or resistance area in an ongoing trend. Yes, the whole area of the Kumo seen as a support or resistance area. So, as far as support and resistance areas, we've got four levels essentially, 3 zones. Yes, the red line, the blue line, and the whole area of the Kumo. All right. Hope all that is clear. We're going to put it all together again when we see all the signals together. Do let me know if anything is not clear, but pay attention to this because the Chiku span often confuses people. So how do we interpret the Chiku span? It's actually simple once you understand. A buy signal is generated when the Chiku span crosses above the closing price of 26 periods ago. A buy signal is generated when the Chiku span crosses above the closing price 26 periods ago. So let's go find a live chart to look at this in. Let me also put that Chiku span on. So a buy signal is given when the Chiku span crosses above the closing price 26 periods ago. Now remember, this Chiku span is plotted 26 periods into the past. So here, when the Chiku span was crossing above that price, which candle were we on? We were on this candle. So at the moment that this candle was live and was being formed, we saw the Chiku span crossing above the price 26 periods ago. So there we had a buy signal. But that buy signal came when we were on this candle, yes? So when we were on this candle and the market was going up, we were seeing the Chiku span cross above this price 26 periods ago. So when we were here, we were getting a buy signal from the Chiku span. Okay? Now a sell signal is given from the Chiku span when the Chiku span crosses below the price 26 periods ago. So again, here, what do we see? We see the Chiku span going below price. What candle were we on at that moment? We were forming this candle here. So at the moment this candle was going down, we saw the Chiku span crossing below the closing price 26 periods ago. So when we were on this candle, we were getting a sell signal from the Chiku span. Is that clear? Let me say one more thing to make it even more clear. That's when the buy and the sell signal is given. Yes? Now, let's say, for example, now, if I was to determine what is the signal that's coming from the Chiku span now, of course, we know buys and sell signals come when it's crossing the price. But at this moment in time, what was the latest signal given? Is Chiku span bearish or bullish now? All I have to do is compare it with the price on the same vertical axis as the Chiku span. So now what do I see? That the Chiku span is below the price 26 periods ago. So the signal from the Chiku span is bearish. Yes? If I look at this daily chart, for example, where I see that the Chiku span is above the price 26 periods ago, I could say that at this current time, the signal from the Chiku span is bullish because it is above the price 26 periods ago. Of course, when was the last buy signal given from the Chiku span? When it crossed above the price. Yes? Is that clear about the Chiku span? Well, let's see. What is the signal from the Chiku span now that we see on this chart? Is it bullish or is it bearish? This is not a rhetorical question. Eh? All right, correct. So we have a bearish signal because we are below the price 26 periods ago, yes? Now, if this price continues to rise up, which means that the Chiku span will go above the prices, there we will have a buy signal. So while this candle is going higher and we see 26 periods ago, Chiku span is crossing above the price, there, so on this candle, we will have a buy signal. All right? Very simple. Okay, I'm going to try this one more time. If you don't get it, you're probably not going to get it. So let me try one more time. Let's put another chart on. All right, so here we go. So if I'm to see now, what is the signal from the Chiku span? All I have to do is put a vertical line where the Chiku span ends and see if it is above the price or if it's below the price. Now I see that the Chiku span is above the price on the same vertical axis with it. So the Chiku span is bullish. Yes? Now, when was that bullish signal given? It was given when the Chiku span was going above the prices here, or in other words, when we were on this candle breaking to a new high and the Chiku span was crossing above the price 26 periods ago, we were getting a buy signal. So somewhere on this candle, we got a buy signal from the Chiku span. All right, and in the most simple way, as we said, if we forget about the buy and the sell signal and we're only looking at the interpretation, all we have to do is put a vertical line where the Chiku span is, and if it is above the price, it means that the Chiku span is bullish. Yes? If it is, look at here, if I put a vertical line here on the Chiku span, I see that the Chiku span is below the price on the same vertical axis as it, so the signal is bearish. All right? All right, I hope that is clear for everyone with the Chiku span. Now, that is the first signal with the Chiku span to understand. Another confirming sign that comes from the Chiku span is that the downtrend is strengthened, or a confirmation towards the new trend when the market changes over to the other side of the Kumo. So before we had an uptrend here, then the market crossed the Kumo, became a downtrend. A good sign for this downtrend is when the Chiku span crosses below the Kumo. So that acts as a further confirmation for that new downtrend. Yes, if we see it also on another time frame. For example, now the market was in a downtrend here, and now it's trying to cross to the other side of the Kumo. So ever since we closed above the Kumo, it's implying an uptrend in the Ichimoku, yes? Now, what would be a good confirmation sign? One is when our Kumo turns bullish, as it's trying to turn now, yes? Another good sign of confirmation for the uptrend is when the Chiku span crosses to the other side of the Kumo. Yes, that would act as a further confirmation for this new uptrend. All right, so that is the Chiku span. All right, so we saw the buy signal when the Chiku span crosses above the close 26 periods ago. Sell signal when the Chiku span crosses below the close 26 periods ago. Now, most importantly, as we said earlier, the Ichimoku indicators. The Ichimoku indicators are used together as one set of signals. If the signals do not agree, as we said, the chart is considered to be unreliable. When all three signals, or all five as we saw them, 6, are in agreement, then the signal is strong. That's the main way it's interpreted. All right, so it's seen as one set of signals. Now look at this. The trend following signals focus on the cloud, while the momentum signals focus on the turning and the baselines, which is the Tenkan Sen and the Kijun Sen. So we're using the cloud to find the trend, and we're using the Tenkan-sen and the Kijun-sen to find the turning points in that trend. So in general, movements above or below the cloud define the overall trend. Within that trend, as the cloud changes color, it strengthens or weakens that ongoing trend. Now, once the trend is identified, then Tenkan-sen and Kijun-sen act similar to MACD or moving averages for signal generation about entering and exiting. Finally, simple price movements above or below Kijun-sen can also be used to generate signals. So let's go through a summary of all the signals, and we'll put them all together. So what are the bullish signals? That prices moves above the cloud, implying uptrend. Cloud turns from bearish color to bullish color, reinforcing that uptrend. Price moves above the Kijun-sen is a buy signal. Price moves above the Tenkan-sen is a buy signal. And Tenkan-sen moves above Kijun-sen is a buy signal. And we also saw that Chiku span is the last confirming signal. So what are the bearish signals? Price moves below the cloud. Cloud turns from bullish to bearish. Price moves below Kijun-sen, bearish signal. Price moves below Tenkan-sen, bearish signal. And Tenkan-sen moves below Kijun-sen, bearish signal. And those are the Ichimoku signals. Now, the Ichimoku can be used in various ways by different traders. Yes? For example, what do I mean by this? We said that we've got 5-6 different indications there, yes? Maybe someone, for example, is waiting for all the indications to align in the same direction before entering a trade. Yes? Maybe someone else is only waiting for 4 of those indications to go in the same direction before entering. So the sensitivity of how we're going to use it can depend from user to user. The same with the exit. Let's say we take a long position. Maybe one trader, as soon as the first indication turns bearish, takes an exit of that position. Maybe someone else who is less aggressive is waiting for the double crossover to happen against him before exiting. So as we saw those as a series of signals, someone can choose to be more sensitive or less sensitive in how they plan their entry or their exit out of a trade, for example. Yes? And that's the first thing I want to say. So let's go and understand it now. Okay, look at this. I'm going to start off. Let's use a nice trend so we can get a nice understanding here. So look at this. Now, as we said, price in general, the Kumo in general is defining the trend, yes? So let's take the signals one by one here. What can we say here? As soon as we had a close below the Kumo, it was our first indication of a downtrend. Yes? The Kumo, 26 periods into the future, had also turned bearish, or was actually just before turning bearish. So we weren't bearish color yet. Yes? First indication was the close below the Kumo. Second was when the Kumo turned bearish. Now, maybe this isn't always the best signal, but for someone, this could be the first entry into the new downtrend. Yes? The breaking to the opposite side of the Kumo, close below the Kumo. Now, this is one entry, for example, that can be used. If someone used this entry, they could probably put a stop loss above the Kumo, maybe, either above the Kumo where they're entering or above the high of the Kumo in the future. That could be one way to go and follow the trend. Yes, it's not only that the market crossed below the Kumo. At this point of the market, what was the information we're getting? We've got price below the Kumo, Kumo about to turn bearish color, price is below the red line, price is below the blue line, and red is below blue. Chikou span has crossed below the price, and Chikou span has also crossed below the Kumo. So by the time this candle closed, all the indications were bearish, correct? So maybe someone in that way could have taken the entry as soon as we cross below the Kumo with all the indications bearish and go short. Yes? Now, that's one entry. We won't discuss all the entries, but as the trend is keep on going, what do we know? When the market is going to go in for a correction, what's likely going to happen? Look at this. All the way down here, all the indications from the Ichimoku are bearish again, yes? When do some start turning bullish? Well, when the market starts correcting upwards, one thing that might happen is to cross above the Tenkan Sen. So one of the indications now has turned bullish, yes? Most likely because the market is going in for a correction. And we also see it even go above Kijun Sen. Now, if the market finds resistance at the Kijun Sen, then recloses back below the Kijun Sen, that could be a sell signal. Also, when the market goes above the Tenkan Sen and then recloses back below the Tenkan Sen there, that is also seen as a sell signal. Yes, because notice again, price is below the Kumo, red line below blue line, price below red, price below blue. In other words, here, all the indications were bearish. Here, some of them started going bullish at the correction. And when the correction ended, they all aligned bearish again. So whenever all the indications align bearish again, that could be an opportunity for a new entry to go short. Yes? Now, of course, those exits, as we saw, can be executed depending on how sensitive we want it to be. For example, maybe the guy who took the short up here when he entered with the crossing of the Kumo, as soon as he saw one close above the red line, the first indication of bullish, maybe that was his aggressive exit. Maybe someone else who was waiting for a less aggressive exit was waiting for a close above the Kijun Sen to close. Yes? And maybe someone else was waiting for the double crossover for the red to go above the blue in order to close that position. Yes? So how we execute that entry or exit can be in different ways. But let's see some more examples here of the trends. Let me also add the Kijun Sen here. Sorry, the Chikou span. All right, so let's start again. This trend from when it started. Here, we have the first close below the Ichimoku, the first sign towards a potential downtrend. Now, at that point, our Kumo had just turned into a bearish color. So trend signals are good. Chikou span is below the price. Yes, and was getting ready to cross also below the Kumo, also bearish signals. Now, as we see, price is below the red line, price is below the blue line, and red line is below the blue line. So again, almost all the indications, apart from the Chikou span with the Kumo, are already bearish. So someone wanting to get in from the beginning of the trend, that could have been an entry. Yes, it's the first time all the signals just aligned bearish. Now look at this, then the market goes down. Market goes in for a correction and goes above Tenkan Sen. Now, after the market closes above Tenkan Sen, yes, then it recloses below Tenkan Sen. So again, everything has realigned bearish. That could have been another entry. Yes, maybe someone didn't take that entry. Market goes in for a correction, finds resistance on the Kijun Sen, and starts moving down again. That could be another entry. Yes? So the most aggressive, if you would like, entry is every time the market comes back above Tenkan Sen and then goes below it again. So every time, in other words, they all align bearish again, it's an opportunity for a new entry. Yes? Now the stronger corrections will probably come back to the Kijun Sen line, and weaker corrections will probably find resistance on that Tenkan Sen line. Yes, now look at this. Let's also see another kind of signal. I'm just going to take away the Chiku span here, so not to confuse us on that chart too much. We can come back to look at it again. But look at this. Whoever was short, let's say, in this market, now as we saw, possible exits might have been when the price crosses above the Tenkan Sen, or a stronger sign for an exit when the price eventually closed above Kijun Sen. That was a strong bullish indication, or could be seen as an exit to the shorts. But let's put it this way. By the time we have the double crossover bullish, we should have exited any short positions. Yes, so by the time we get a bullish double crossover, by then we should have exited any short positions. Now look at this. This was a bullish signal because the red went above the blue, yes? However, a trend following trader wouldn't act on this, because a trend following trader is only looking to act on bullish signals as long as the price is above the Kumu, and only looking to act on bearish signals as long as the price is below the Kumu. So maybe for that trader, this wasn't a buy signal, but it was a signal to exit any short positions. Yes? On the other hand, maybe for another trader who was expecting this market to turn around, could have taken this buy signal against the trend, meaning that it was a buy signal while we were below the Kumo, as an aggressive entry against the trend. Yes, in his expectation that the trend was going to turn around. So we can see that each signal can be used maybe by some traders as an entry and some others as an exit. What's important to understand is how we interpret them all together. Yes. So if we see this downtrend, what were the opportunities by the Ichimoku to get in? Well, first was when we had the first close below the Ichimoku. That was the first possibility to get in. Maybe a second was when we found resistance on the Tenkan Sen and started moving downwards. Let me show you another kind of signal. Look at this here. So the market comes down and goes in for a correction. It closes above the Tenkan Sen, indicating the possibility of a correction. And then it recloses back below Tenkan Sen. When we reclosed below Tenkan Sen, that could have been an opportunity to go short. Yes? Because we just had all the indications realigning bearish again. Yes? Remember, we had our Tenkan Sen turn bullish and then return bearish. So one possible entry would have been as soon as the price reclosed below Tenkan Sen. But let's say you didn't take that signal. All right? Let's say we didn't take that signal. What was another signal? Well, here, when the market is breaking to a new low, what can we see? We've got price below the Kumo, we're in a bear market. Price below red line, price below blue line, red line below blue line. In other words, all the indications are bearish and the market is breaking out to a new low. Now, this might not be the best kind of signal, but it's also a signal, yes? Everything is aligned bearish and the market is breaking out to a new low. So it's like I've got a downtrend. If I expect that to continue, I can take the breakout of the new low to continue that trend. Yes? So it's a case where all the signals are aligned bearish and the market is breaking to a new low. In that case, I could have taken a short there with a stop loss above the recent high, for example. Yes? Also here, as we said, those aggressive entries are anytime we cross above the Kijun Sen, the Tenkan Sen, we've closed above the Tenkan Sen, and then we have reclosed below the Tenkan Sen. As we saw, below the candle that is giving us the signal, we could go short, then we could have placed our stop loss above the recent high. Yes? Now, whether we found targets or not, as we said, by the time we see the double crossover bullish signal, we should exit all our short positions. So by the time we saw that double crossover, exit of any shorts. As we said, maybe for an aggressive trader, that was seen as a buy signal for the expectation of that trend reversal. But for the trend follower who didn't take that signal, what was the first signal in the new trend? When the price closed above the Kumo. If he didn't take that, when price closes below Tenkan-sen and recloses above Tenkan-sen is seen as a buy signal. A better buy signal, of course, is when price closes below Kijun-sen and then recloses back above Kijun-sen, the blue line. Now, again, in that case, we could take a buy signal above the candle that closed above Kijun-sen with a stop below the recent low of the correction. Yes, but the ultimate signal is when we see the double crossover bullish while we're above the cloud. So there where we have the red line go above the blue line, seen as a buy signal, stop loss can be below the lows. And for target areas, well, simple way we saw yesterday that you can use for targets is what? Use a fixed risk to reward ratio based on your stop loss. So find the risk and reward based on the stop loss, and that gives us our 1-to-1 and 2-to-1 targets. Yes, that's a simple way in which we can take profits. So I mean, Ichimoku can give us early exits based on the correction when one of those indications turned bullish, for example. But the one thing it's not indicating to us is target areas. Yes, so for target areas, maybe we have to use another tool or our fixed risk to reward ratios. Yes. So before we see any other examples or anything else, how is that Ichimoku looking to you? How is that Ichimoku looking to you? Is it clear to see those signals? So look at this downtrend, for example. First signal when we closed below the Kumo. When was the next opportunity to enter? All right, you see how clear the signals are now, yes? I know before it looked very chaotic, but again, it's not that the Ichimoku is doing some kind of magic and it's always telling you where the price is going to go. It's based on moving average. It's not predicting, it's following, yes? But in that one glance is giving us a view of when was the last entry into this trend? Where is the market heading? Yes? So look at this. First indication when we crossed below. Where was the second entry? When we recrossed below the Kijun-sen and the Tenkan-sen there, yes? Do you see that? So we went in for a correction. Tenkan-sen turned bullish. Kijun-sen turned bullish. Even the double crossover turned bullish. And then we have a sell signal when price closes below Tenkan-sen and Kijun-sen. Someone could have taken that short with a stop loss up there. If not, they would have taken the double crossover there where the red line goes below the blue. Now, if those signals weren't taken, when we broke to a new low and everything was pointing bearish. If it wasn't for those signals, when we correct again and reclose back below our lines, that's a new short. Or if we miss that, when everything is bearish and we're breaking to a new low. Yes? Also here, correction, close above Tenkan-sen, close back below, new possibility. Correction again, find resistance, look at that on Kijun-sen, maybe also gives us a reversal candle. Either take the reversal candle or when we close again back below Tenkan-sen, new entry to go short. There it is also, yes? And there it is also again. Now, as long as the trend continues, of course, what it's not telling us is where the trend is going to end, yes? So what did we say is a strong sign to not be short anymore? When we see the double crossover turn bullish, we no longer want to be short. That's a strong indication, yes? Now, of course, if it recrosses again, we could take the risk to re-enter, but when it recrosses upwards, we don't want to be short anymore. All right, is that clear? And there it is in a strong trend. So you've seen a strong trend. Corrections don't come back to the Kijun-sen. We've got all those little opportunities at the Tenkan-sen, giving an opportunity to re-enter. Now, of course, as a trend following indicator, as long as the trend is strong, it will work very well. Yes. So let's see, for example. All right, just going to look through your comments to make sure we're on the same page. Not that much concentration. Very, very simple. Let's throw any chart on with a decent trend on it at least. Yes. So, first indication, breaking below the Kumo and everything bearish. Yes. Here, we're not looking for any short positions now, are we? Because we've had a bullish double crossover. So now we are waiting to see if this trend is going to resume or if something else is going to happen to give us a signal. Yes? Let's go see perhaps something else if we can find a nice little trend somewhere. Well, USD CAD, even though this is on the 15 minutes. When was the opportunities to enter? Recrossing back below Kijun Sen Tenkan Sen, opportunity to enter. If not that, market breaking to a new low with everything bearish. Here also there was an opportunity to get in and then started to give opposite signals to offer an exit. Well, that's the other thing also, to give us the opportunity to maybe exit also in profit if we took the right entry. Yes. All right, so I see most people are very clear on it. Is there anyone who isn't clear on it? So, I mean, look at this dollar trend that has been lasting on any of the majors on the daily. Here's the perfect case with the NZD. Break below the Kumo, downtrend. Here, maybe a few opportunities to get back in. After the correction, double crossover bullish. And here we have a reclosing back below Kijun Sen. That was the end possibility to enter. Or after we had the double crossover, or after we broke to a new low. Yes. Now, of course, if you're going to try and enter with these methods after the trend has been running for a very long time, well, as you know, at some point the trend is going to end. Yes, that's why we're always looking to get in either with the beginning of the trend or likely on one of the first or second correction levels. Yes, so the first time that kind of correction happens is usually the best time to get in. There it is again, the first time that correction happens. Correction, support on the blue line, recross above the blue and the red line, that could be an opportunity to enter. Also a reversal candlestick there, yes? So you notice it was the first correction in that ongoing trend. Those are the cases we're looking better to get into. What time frames can we use the Ichimoku? All time frames, as long as the market is trending, is the ideal scenario, yes? So it's a trend following indicator just like the others. I wouldn't advise you to go use it on very low time frames. So that is the Ichimoku Kinko Hyo, everyone. Hope we cleared that up very nicely. There's another entry there with the trend. Again, when the trend is clear, crossing below, finding support on the Kijun, then recrossing above all and accelerating upwards. Again, support on the Kijun Sen, reversal candlestick, yes? So that is the kind of way that the Ichimoku is used also as an analytical tool and as a trading strategy more so. All right, everyone. So that's all for this session. Let's take a quick break, around 10 minutes time and 20 minutes past the hour. Let's start off with our Avramis River indicator. So a similar indicator that we want to see next, which is our own custom indicator, which is, again, another trend following indicator being the Avramis River. So we're going to be taking a look at that in 10 minutes time. hope to see you in our next session. So thank you for coming. And any questions about Ichimoku, if they haven't cleared up, bring them and we'll see them at the end of next session. For anyone who isn't clear about different ways to use Ichimoku, we can ask them out at the end of next session. All right, guys, so quick break and be back in about 10 minutes time to start off with the Aramis River Indicator. All right, everyone. Ciao, ciao. Be back in a bit.